Hi, my name is John Stevenson, also known as the Guaranteed Retirement Guy. Today, we're going to be talking about the highest paying annuities right now. Okay, so if you're looking for the highest paying annuities, whether it be income or growth, I'm going to show you both. Okay, so we're going to start with income, and we're going to start with the income rider, because most people who reach out to me, this is what they want. They want highest income. All right, so I'm going to base this off of someone in Florida. They have got $500,000 in an IRA. Could be a 401k, could be non-qualified funds. It doesn't matter. The income will still be the same. It's just taxed differently. Okay, so I'm going to assume that they want to take income at 67 because that's their full retirement age for Social Security, and that's how long they want to wait. This is not the case for a lot of my clients, though. A lot of my clients will take it early. Okay, they might take it earlier than 62. They might take it at 65. Okay, so it's different for everyone, and the payout rates will be different. So this is deferred for 5 years, and I just want to show this for this example so you can see what it looks like. Okay, so highest income, Corebridge, $55,000 a year. Okay, followed by Athene and F&G and so on. There's a lot of different carriers out there. I work with all of them. If you want to book a call, there's a link below this video. It goes directly to my calendar, and we can look at all of the highest paying annuities for you. Okay, I hold nothing back. Okay, so, all right, well, that's good. So we've got that, but let's say I'm married. Well, that's going to change things, right? Because if they're on the hook for 2 lives, that payment will be different. So I'm going to change that. And I'm going to say my spouse is 62 years old. So just keep it really simple. The income's a little bit less. It's $3,000 less, okay? $52,000 instead of $55,000, okay? So again, Corebridge is the highest, followed by Athene, but this time Nationwide is in 3rd place, okay? So it just depends on you and your age, and a lot of factors come into play. Okay, what if your spouse, this might not even, let's say they are, let's see, 55. Okay, your spouse is 55. That's going to definitely reduce it because now they're on the hook for longer, okay? Yeah, $45,000. So, but that's the thing. If you got a spouse that's younger, and I have people who are married to spouses that are 20 years younger, and they want to make sure they're covered. Okay, in that case, you could purchase an annuity just for them and have a single payout for them, and they can activate that whenever. Okay, maybe they can activate that when you die. Maybe you got other investments covering income until then. People use annuities to bridge gaps. Okay, from an early retirement age to maybe their FRA, age at maybe 67, if that's what it is for you, or maybe you want to wait longer. Or they use it to cover loss of Social Security benefits if one spouse dies. So a lot of things you can do with it. Okay, so all right, well, $45,000, that's not bad. So I'm going to go back here and say, well, what if my spouse, and they usually base it off the younger of the spouse, so this might not even change it, but let's just look. Let's say my spouse is 65, I'm 62. Yeah, so it doesn't change it. So it's still $52,000 because they're still basing it off of the younger of the two, and they still know that they're basing it off of a joint payout because they're still on the hook for 2 lives. So that risk is still there. Okay, all right, so I'll go in here and say, well, what if I want to take income at 65? Well, that's going to change things. Okay, my spouse still, I won't change anything else. I just changed that we're going to defer it out for 3 years instead of 5. $44,000 instead of 52. So that's the difference. You just have lower deferral amounts. And I'll show you real quick how this works. I'll go into the income rider because the income rider is what is making this work. Okay, so if I go look at the income rider, you can have 2 values and make this very simple. You got a fixed index annuity with an income rider. Okay, income rider is what gives you the highest income. The indexed part just affects the account value and the death benefit. That is it. It will not affect anything else. You can have 0 growth or growth. It does not matter. Your income is fixed. Okay, so if you look at this, you'll see beginning contract value of $500,000. Okay, and you're going to see there's fees. See the rider charges right here. There's the fees. And then you'll see the account balance will slowly go down because, yeah, it's earning interest, but not much. And over time, it's gone. By the time you're 77, 78, it is gone. But it's fine. The income is what you're after, okay? And you'll notice that the income rider is growing the benefit base much higher than the account value. In fact, it grows it to 627. Okay, so 627,500 multiplied by 7.1, that gives you a 44,553 annual withdrawal for the rest of your life. Okay, and this is joint. So if you take this out for till 95, that's like $1.4 million. Okay, if you live longer or your spouse lives longer, it continues to pay out. Okay, so that's what you have to remember for these contracts. So not bad. It just depends what you're looking for. If you don't like the idea of your money running out in the account, then use a different annuity contract for growth and for legacy. There are contracts for that, but keep them separate from your income ones. Okay, because you don't want the hybrid, because then you won't have great income, and you won't have great growth. Okay, you just want to have the one that is focused on one or the other. Okay. All right. So and there's a lot of variations in this. If you want to look at my calculators, go to johnstevenson.com and you'll be able to play with all my calculators. The income rider is always going to pay you the most, but the SPIA, DIA, and QLAC contracts are for different reasons. I mean, some people need income for a non-spouse or for a certain period. Okay. Or maybe you want to defer RMDs with a QLAC. Okay. There's a lot of things you can do with those. Okay. So we're going to go into highest payout for the SPIA. Okay. Because I promised you I'd show you the highest paying annuities. Okay. And so this might be an income rider. It might not. And I'll show you the MIGAs as well right after this. So if we go in here, we keep everything the same. Actually, I do a single life instead. But remember, it was $55,000 as a single life. Okay. All right. And we're going to defer this out 5 years. Okay. So we want to make sure it's apples to apples comparison. Let's see what that looks like. 43,000. All right. Well, that's not quite 55, is it? See what I told you? And the income rider always pays more. Not always, but usually. Okay. So there are times where sometimes it'll pay more. So it's 4328 times 12. So you're getting 51.9. So 52,000. So you're getting 3,000 less than what you would get with the income rider for a single payout. So it's kind of a no-brainer. Go with the income rider. Okay. So I'm going to go back and I can play with lots of different things. Like I can do a certain period as well, 30 years. That's going to change things as well. So I just kind of want to let you know what you can kind of do with these contracts. I mean, you could do whatever you want with them, and you got to buy them for their contractual guarantees, not for the what ifs, not for the maybes, but for the contractual guarantees. $3,300 per month, quite a bit less, but that's because you're putting a certain period of 30 years. Okay. All right. Again, if you want to check out the SPIAs, there is a link to my website where you can actually plug these numbers in for yourself. You can put your birthday in. If you're doing a joint, you can do that as well. And it's going to spit out all the numbers for you. Okay. And it'll show you all the top companies. Okay. So let's look at top MIGAs. Okay. And I'm just filtering out the hundreds of MIGAs that are out there, and I'm showing you the top 3 in each category. Okay, the highest paying annuities, but these are the MIGAs. The MIGAs are a multi-year guaranteed annuity contract. They are like CDs, but they're tax deferred, especially for non-qualified money. That's great. Whereas CDs, of course, you got to pay taxes every year. All right, so 5.2 for the 2 year. You can see that this is the top 3 here. The 3 years of 5.5, 4 year 5.5. I work with all these companies. If you want to learn about these companies, go to my other video that talks about the best annuity companies, and I talk about each one of these individually. Okay, 5 year, 5.6, 6 year is a 5.65, and so on. See, so 8, 9, 10 years, 5.65. There you go. So there you go, 5.65. If you want to put in $500,000, it's going to earn $366,293. Okay, and I'll show you how that looks. So it compounds every year, which is great. Some of these will pay simple interest only. There is a few that will do just simple interest. So don't be fooled. Some of those, you see these high rates and you're like, wow, that's great. Except they're simple interest and they don't actually have the highest yield. Okay, so it starts with $28,000 in the first year of earnings, 5.65 multiplied by $500,000, followed by the 9th year. At the end of 9 years, it's $819,000 times 5.65 gives you 46,000. You've earned 366,000. It's really, really good. Okay, that's guaranteed. It's just a fixed rate. It's the highest rate right now. Okay, as of this video. Okay, hopefully rates are higher when you watch this video, and if they are, great. You'll see it on my website because it gets updated every day. Okay, so these are the highest paying annuities. Okay, you might be looking for highest income. Okay, highest income is usually the income rider. Maybe you're looking for a SPIA or a DIA contract that doesn't have cash value. They're irrevocable, but you need it to bridge a gap, maybe from 60 to 65 until you take your pension. Okay, they're good for that. Maybe you want it for life or for joint, and you want a certain period on there. So if you and your spouse both die, it will continue to pay out the income to someone else. You can do that as well. Okay, there's a lot of things you can do with those contracts. The QLAC contract, of course, will allow you to defer RMDs, which as of the date of this video, they allow you to defer up to $210,000 out of your IRA. So if you're married and you both have IRAs, you can actually do $420,000 between the two of you. Okay. So people will choose to do that, and you can defer out to age 85 if you want to do that, up to age 85. Maybe you want to spread it out and turn some on at 79 and 80 and 82 and 83 and so on. So it's just kind of a nice thing to do if you got RMDs that you just kind of want to push out a little bit more and keep your taxes a little bit lower. So anyways, a lot of good options. If you want to book a call, there's a link below the video. There's a link on my website, johnstevenson.com. If you like the video, click the like, click the share. And if you want to comment below, please do, and I will answer. So I'm not going to try to sell you anything. I don't like to hard sell people. No one likes to be sold, but I would love to sell you an annuity. I mean, if you are looking for highest paying annuities, I can help you with that. So I appreciate you watching, and I hope to see you soon.